together, we'll have a wonderful training session today. So once again, thank you.
Thank you very much, Adumesi. We'll take off straight from here. We have two main presentations that we're going to make. One is on basic accounts for churches and small and medium-sized businesses. The other is on managing my finances. And so we'll just take off. And I trust that those who are currently online, they can hear us from there. First of all, we are here at, did I have that one first? Okay, yeah. This is the Frimpong-Manso Institute. We have some flyers there. I wish, big boy, please pick copies each for them. One is on Frimpong-Manso Institute, the other is on Glimps. This institute believes in transformation through some thematic areas: apolitical intervention, faith-based intervention, factual intervention, then the final one is ethical intervention. So programs are run here on some periodical basis. And anytime you have something that relates to any of these thematic areas, you can consult from Frimpong-Manso Institute, and you can be sure that you will have experts who do justice to your items for you. Now, about Glimps. Reverend Professor Frimpong-Manso decided to do something to help churches so they can be on their financial feet. And so he took a risk. And the risk was that because he has some relationship with several banks, he contacted one of the banks to give him an overdraft. And then he decided to use the overdraft to help small churches, medium-sized churches, so they can, because he can access that fund, but it's difficult for smaller churches to go to the banks and bring this and pick this and do that. So to make it easier for small churches, medium-sized churches to access funds, he decided to take that risk. So for those of you who are customers of Glimps, this is what happens. The interest you pay is what he uses to pay the bank, the overdraft, on the interest on the overdraft. So this is basically what he's doing as a way of giving back to society the way God has raised him. Glimps is a member of the Microcredit Association of Ghana. There's an association that oversees every activity of members of the Microcredit family, and Glimps is a member. That means that there is no way Glimps will sideline you or dupe you in any way. Besides, Glimps is also registered with the Bank of Ghana. And so again, normally to have a financial institution, to be sure that this is a recognized one, that institution must be under a regulator. And so all I'm saying is that Glimps is under a regulator, and therefore be rest assured. Okay, so let's take off. I'm a pastor, I'm a lecturer, I'm an accountant, I'm an auditor, I'm an administrator. So I have to tell you this so that you have confidence in what I'll be telling you. Anyway, churches are required to prepare accounts. People think that churches are not supposed to prepare accounts, but churches are required to. They are supposed to. Just that there are specialized accounts that churches prepare. Churches don't prepare the same type of accounts that businesses prepare. So whatever the slide says, churches like other non-profit organizations. So when you see NPO, I'm referring to non-profit organizations that are not in there to make profit. And they prepare financial statements and to manage their finances, ensure transparency, and meet regulatory requirements. So churches prepare accounts for these three reasons: manage their finances, ensure transparency, and then meet regulatory requirements. Now, these are the basic accounts that the regulators want churches to prepare. we have statement of receipts and payments. We have statement of income statement, statement of income or income statement. You also see statement of cash flows, and then finally, statement of financial position, which is normally called the balance sheet. So these are the four main accounts or statements that churches are required to prepare. For most churches, I have these two, number 2 and number 4, in red because these two are, shall I say, compulsory. Normally, the statement of receipts and payments are kept internally. But then every year, the church is required to come up with an income statement and then a statement of financial position. Number 1, number 3 are not, if you don't have them as showing them as part of your records, you won't fall into too much problems. But if you don't have number 2 and number 4, you'll fall into several problems. Okay. So I'll pick them one after the other. This is statement of receipts and payments. In the business world, those who are into business, those who are making profits, or those who are in to make profits, they call it cash book. So what the business people will call cash book, the churches will call receipts and payments. So what I'm saying is that it is the same name, it's the same thing, but referring to different institutions. Now, all cash receipts, anything you do, any money you are receiving will go under the receipt section. And any payments you make, expenses you incur and pay, will go under the payment section. So that is how it operates. When we're doing this, we work with what we call verifiable documents. When it comes to accounts, we always want to get some documents to prove something, to show something as a basis of what we are doing. Payment vouchers, PVs, we call them. Before any payments are made, make sure the necessary PVs have been passed. In the payment voucher, you are showing details of what you are going to pay, how much you are paying, the date it is being paid, who confirmed, who prepared it, who approved of it. These processes must be followed before payments are made. I asked my lady to do a printout. I have a sample PV. When it comes, we'll distribute and then we'll look at that. It is important that verifiable documents are kept. Then receipts. When you receive money from your customers, your clients, you are supposed to issue receipts to show that if you pay any money into a bank, the bank will give you a deposit slip. That is evidence of payment. In the same way, if you pay money to buy something, demand a receipt. Why? Because in accounting, we expect that there will be verifiable document that we can verify. Invoices are also verifiable documents. Assuming you want to buy, your church wants to buy a set of drums, it would be good to take 2 or 3 invoices from different companies. Most of what we do is that, oh, I say 10,000. Between the invoice and the receipts. The invoice shows the cost of the thing. So one, you bring an invoice, we'll give you money, you go and buy the item, and then you bring us a receipt. So for the documents to be in the form that we need, we must have the payment voucher, we must have the invoice, and we must have the receipts. These 3 go together. At any point in time, you have to ensure that I have a PV and I've attached documents like the invoice and then the receipts. Sometimes people get into trouble with auditors when the auditors come, because the auditors will be asking for these things. So where's the invoice? Okay, so this is the invoice indicating 10,000. Now, what shows that you actually paid the 10,000? And that should be the receipts. If it is a check you issued, the PV will show the check number. The auditor can check with the bank statement. And that is also quite important. Now, in the receipts and payment account, the basic idea is that it shows you your opening cash balance, cash and bank balances, and then your closing cash and bank balances. I'll do an illustration, but let me go to statement of income and expenditure. Now, I said that the receipts and payment is like the cash book of a company. The income and expenditure is like the profit and loss account of a company. So churches are non-profit, so they cannot say profit and loss account. So they will say income and expenditure. So all churches around the world, they don't prepare profit and loss account. They prepare income expenditure. But businesses prepare profit and loss account because they are in there for profit. People have criticized churches. They say that, but we still make profit. Even though we are not in for profit, we still make profit. By convention, we are non-profit making. We don't do business. So we are non-profit making. So then we come under income and expenditure. So remember these two things. The receipts and payment account is like the cash book of a business. The income and expenditure account is like the profit and loss account of a business. Okay. This statement shows the church's incomes and expenses. So all incomes we are earning will go here. All expenditures will go there. There is a little difference between the receipts and payments and the income and expenditure. In the receipts, any money we are receiving will go there. But it's not every receipt that qualify as an income. For example, if you apply for a loan from Glimps, say 20,000 cedis, and Glimps gives you 20,000 cedis, it is a receipt, but it's not your income. So in your receipts and payment account, you will record that 20,000 loan has come in. But if you are declaring incomes you have made, that loan is not an income to you. So the loan will not go into the income and expenditure. And this is where people who don't have some of these fundamentals confuse their accounts. You can see loans in companies' income and expenditure, and you ask, in churches' income and expenditure, you ask, do they really understand what they are doing? It is a loan. It's not your income. It is not your income, so it doesn't come in there. So that is your company, your church can buy a land or a set of drums, let's say 40,000 cedis. When we are preparing our receipts and payments, we have paid 40,000, so it will go there. But when you are preparing your income and expenditure, the 40,000 will not come as expenditure. It is only the depreciation on that fixed asset, that thing you bought, that will come in there. So these are some of the differences you will see between receipts and payment and income and expenditure. The receipts and payment will show your opening and closing cash balances. But the income and expenditure will show you the performance of the church, whether you made a surplus or a deficit. If it were a business, we'll say whether you made a profit or a loss. But because we are not in business, we'll call it surplus if it is profit. And we'll call it deficit if it is a loss situation. Anytime your income is more than your expenditure, it is, what did I do wrong? Okay. If your income is more than your expenditure, you get a surplus. But if you spend more than the income that came in, you have a deficit. That's how it goes. The third one, okay, this one I've talked about. So number 3, instead of cash flows. This is a bit technical. So I will not spend time on it, but it shows all cash inflows and all cash outflows by looking at 3 things: your operating profit, your investing activities, and your financing activities. So the only thing I want you to note here is that the statement of cash flow shows all monies that came in, all monies that went out. With respect to these 3, our operating profit, our investing activities, and then our financing activities. The balance sheet, known as statement of financial position, it shows your financial position. That's why it is called statement of financial position. Now, this is where you have all your assets and your liabilities. So note this: your receipts and payment account will show your cash situation. Your income and expenditure will show your, shall I say, profit or loss situation, surplus or deficit situation. But your financial position will show the assets and liabilities that you have. What is an asset? Very simple. Anything you own, OWN, is an asset. If you own it, it is an asset. Anything you owe is a liability. So if you own it, it is an asset. If you owe, it is a liability. That is the operating definition I want you to get. If we own it, it is our asset. If we owe, it is our liability. So these chairs that we have here, these chairs are owned by the Frimpong-Manso Institute. So when Frimpong-Manso Institute is paying their accounts, they will include the value of these chairs as part of their assets. The ACs we are seeing will be part of the assets. Anything they have acquired to use here permanently will be called a fixed asset. I've written here, there are 5 types of assets. This is not an accounting lecture, so I will not I'll not go into those, but there are 2 types that you will see in every church's account. So though there are 5 types, I'll just talk about 2, fixed assets and current assets. Fixed and then current. Now, if your church buys or your business buys something with a view to using that thing permanently in that church, we call that a fixed asset. It is fixed not because it cannot move or we cannot move it. It is fixed because we bought it not with the idea of reselling, but with the idea of using it permanently in the church. So I'll give the examples again. Chairs. So generally furniture and fittings, we call them fixed assets. Land and buildings, they are fixed assets. Now you agree with me that I can move this chair, but it is still a fixed asset. Why? Because the Frimpong-Manso Institute bought it to use it permanently here. The institute did not buy it to resell. When you buy to resell, it doesn't qualify as a fixed asset. But once you buy with the view to using it permanently, it becomes a fixed asset. So land, buildings, furniture, fittings, motor vehicles, all these are fixed assets. What about, well, when a church buys a land, the church buys it with a view to using it permanently there, so it becomes a fixed asset. So that's the definition. Once the thing is to be used permanently for the organization, for the institute, it becomes a fixed asset.
Maybe initially, that is your plan. But maybe as time goes on, let's assume that Frimpong-Manso has several lands. Maybe about 3 lands. And now the institution wants to expand.
Yeah.
And now the land has appreciated.
Okay.
Which possibly you can dispose it, use it to expand. Then later you can go in for another one. So maybe initially it can be a fixed asset. But as time goes on, you may think of disposing it for the purposes of expanding.
So in accounting, it's still a fixed asset. It is still a fixed asset because, in fact, these chairs.
With the intention that you will not sell it.
Is it? Okay. All right. So let me clarify something. If we go and buy these chairs and we display them for sale, even though it is furniture, it is not a fixed asset. Because we bought them, we have displayed them, we are selling them. So technically speaking, they become part of our stocks. But those that we have bought that we want to use, maybe I will not say permanently, because nothing is permanent really, but something we're going to use for a while. We're going to use it for a while because we are what we call disposal of assets. We can sell our chair, we can sell our cars. It gets to a point where we need to sell them, so we'll dispose them off. But it doesn't take away the fact that they were fixed assets. Okay. Then there are current assets, stock, receivables, your cash balance, your bank balance. All these will be part of our current assets. Current assets change in value. Current assets within one accounting period, within 1 year, they will change in value. Your stocks, assuming you bought some items, supplies in your church, as you use them, the value is changing. Because you'll be buying some additional ones, you'll be using those that you have there. Receivables are all those who are owing you. As they pay you, their indebtedness will be reducing. And for a church, who owe us? The members. So what happens is that it's just that sometimes we don't have the full information. But ideally, I know that when the church is paying its accounts, if the church knows how much members should have paid as tithe, but they've not paid, it must appear in the accounts. But normally we don't have the figures, so we allow that to go. The money you have in the office is part of your current assets. The money you have at the bank is part of your current assets. And so all your assets put together will give you what we will call your total assets. And the balance sheet will show these assets. So anytime you pick a balance sheet, you see assets. And then you will see liabilities. As I said, the things you own are assets. The things you owe are liabilities. And there are two types of liabilities, long-term and short-term. When an accountant says the thing is long-term, it means that it is beyond 1 year. So if you come for Glimps loan and you are paying within 6 months, it's a short-term liability. You are paying within 9 months, it is short-term. You are paying within 12 months, it is short-term. The moment it goes beyond 12 months, it becomes long-term. So that's how we define what is short-term liability, what is long-term liability. So this is for that. Now, let me show you one or two. Okay, I think these examples we have given, examples of fixed assets, land and buildings, motor vehicles, furniture and fittings. Long-term investments can be, they are not fixed assets but they stay in for a while. So in between fixed assets and current, I would place them there. These ones we've given. I have here department holdings. Maybe you have women's ministries, others will say women's fellowship. You have a youth section. If they have some money with you, because in some of our churches, the money belonging to the departments are held by the church. Every department is supposed to pay the money to the treasurer of the church. So if their money comes to us and they have not used all, what is left, we can have them here as departmental holdings. Now this is a situation where they have used more than they are supposed to. But if they have, assuming they brought 100 cedis and they have used 20, the 80 left, it is like the church is owing them. So then the 80 becomes, it goes to what we call the liability section. Because, what's the name of your local church again? Breakthrough. So Breakthrough is owing men's ministry 80 cedis. So when we apply our accounts, it will appear as a liability because we are owing them. But assuming men's ministry brought 100 cedis and they have spent 150, it means the church has given them more than they have with the church. That 50 will come under current assets because like they are rather owing us. So that is how it plays out. I think I've explained the liabilities. If it is more than 12 months, it is long term. If it is within 12 months, it is short term or current liabilities. So accounts payable, if you have a bank overdraft, it is considered a current liability. So we realize I have repeated the departmental holdings because it can be an asset, it can be a liability, depending on whether they have used all their money in excess or no. Tithes, levies that are in arrears. So assuming as a church, you are supposed to pay some money to the district or region or to your head office, and you've not paid, your church is owing your district. It must appear in your accounts as a liability. I go through accounts for companies and I don't see levies that are in arrears. I don't see tithes that are in arrears. These ones you will know because assuming the district says every month you are supposed to pay 100 cedis. And by the end of the year, 100 times 12 is 1,002. But by the end of the year, you had paid just 1,000. It means you are owing the district 200 cedis, and that 200 cedis should appear as a liability. So the basics that we're considering are what I've just taken you through. I'll show you some figures. And then, okay, maybe I have to explain this quickly before I show the figures. So let me explain this quickly, and then I'll pick the figures. Organizations run on budgets. We are in May. Before we enter into 2025, your church, your institution should draft a budget. The budget should be based on what we have done in the previous years. You can check 2021, 2022, 2023, and then look at the figures, and then based on that, you can put some estimates down for next year. Your budget should be based on the programs you also want to run in the following year, because some programs are expensive. So all these factors must be considered, and then you put up your budget. It is basically your expected receipts and expected payments. After our payment vouchers, invoices, and receipts, so let me move on. Payroll, if your church has some workers you have been paying, then you need to keep a payroll account. It shows the details of how much each person is giving, if there is any tax on it, if there is any allowance, if we are paying the Senate for that church worker. This payroll will show all those details in there. Occasionally, you need to go for your bank statement. Whether it's a church, private business, I would suggest that every 3 months maximum, just tell your bank that we want our statement. Because some of the, there are good people around, but there are also bad nuts. Most of these young people in our banks, some of them know that churches hardly go for their bank statements. In fact, there are several churches, they don't prepare any accounts. They don't prepare any accounts, so they don't do any of these things. So once you are not preparing any accounts, you don't even call for a bank statement. So sometimes 6 months, 1 full year, 3 full years, no bank statements. But once your business is such that you are issuing checks, people are paying money into your account, please, every 3 months, go to the bank, tell them that you want a bank statement. Now, because of online banking, you can even go online and apply and get it. Sometimes the online banking will even give you the details. And I would suggest that any money that moves out of your account, work out with your bank so that you get an alert. Any money that drops in there, get an alert. That way, a better person will be a real seeker. But if you're not getting any alert and people are stealing their money, the answer is canonical. People are able to forge other people's signatures. And some kind of checkbook or forge signature. Obinya wo ATM card not so name pin na. Obinsa can phone not so name pin na. So arrange with the bank such that be a free account you have an alert. Some of the banks will even call you. There is this transaction, should we pay? See there be one who say, and this is how I wanted to I want us to do it. Every 3 months call for your bank statement. Ujin so ashim and be or name this bank no shame. That's why you even see that they are deducting some unnecessary things from your account. OT 21, OT 15, OT. Because when they say you are not coming to ask any question. Obeti bank on the OT kakao can say I'm going to my account 100,000 cedis, but they have never been here for the last 5 years. And and somebody can be deducting something. I'm not saying it is simple for them to do, but when they connive, when bank staff connive, they can do this. So let's get that one to going. Fund accounting refers to donations that you will normally receive. There are some businesses, there are some churches, they receive donations a lot. So in that case, you need to classify them near free Abuchireba, near free region Biba. You need to classify them. What we call accumulated fund is what business people call capital. So when you see accumulated fund in churches' accounts, it's the same as capital in business accounts. So those who do business, they will call it capital. But churches don't do business, so churches will call that accumulated fund that we have accumulated over a certain period. All right, let me say, I'm coming to show the figures, but if you don't mind, I want to stand for just 30 seconds for me. Sometimes when you sit for a long time, when you're all right. Whilst we are standing, say, if you want my car, we a question, we can do that whilst we are standing. If you have a question, then ask. Okay, so let me ask you my question as part of our review. Receipts and payments. Me say to say, it's a cash book. It's like a cash book of a business. So those who are doing business, yours, you call it cash book. But those organizations that are not into profit making, we call that receipts and payments. Then income and expenditure, what other, if it is a business word, how would they call it? Profit and loss account. So those that are not into profit making, we call it income and expenditure. But those that are into profit making, we call that profit and loss. We just saw accumulated fund. I said that is how non-profit organizations call their capital. For the business world, it will be called capital. For non-profit organizations, we'll call it accumulated fund. All right, please take your seat. So now I'm going to use figures. These are receipts and payments. Everyone said, yes, starting January 2024, now Sky World Bank. CB here referring to cash or bank. So assume we had 900 cedis. Maybe the cash was 100 cedis and the bank balance was 800. So together, 900. Then offerings for the whole year came to 100 cedis. I'm just using some figure. I mean, we say your offerings for a Sunday will be more than 100 cedis. But I'm assuming, say, yeah, so in a year, the whole year offering, it came to 100 cedis. Then the tithe for the whole year came to 600. Fundraising a year, 3,000. Departments come to buy, maybe men brought something, women brought something, you brought something. We went for a loan of 2,000. So our total receipts. So if it is a church, this is how it will look like. If it is a business, we'll not write receipts, we'll write cash book. But it is still your receipts. Now, if it is a business, it will depend on the business you are doing. And to be as an epano or paboa, we record the sales. And I have that slide. To remember, business is how DS also look like. So let me finish with the church's own. So a typical church will have these as their receipts. Your total receipts, 7,000 cedis. For those of you who are pastors, every Sunday, your treasurer is supposed to show you any money that came in. Itemize them. Send them a beginning, offering, tithe. It must be indicated before your church treasurer leaves. That is how we hold ourselves accountable. Your receipts, you call payments. Maybe we paid for fuel and transport. Salaries and allowances, 2,800. Maybe the departments came for some money, amounting to 300. Maybe we are having a building project. We have put some money in there. we have repaid part of our loan. We have protocol. So our total payments, you have about 6,400. So our receipts, I think 7,000, right? And sky you and soon. No, I'm going to say sky. I say you see. Sky you see 6,400. And you pick the 7,000, you deduct 6,004. Let's just say your closing cash balance, no, by 600. So total receipt 7,000, total payment 6,004, closing cash balance 600. Since say, I saw the accounts and they present here, I will tell the church that during the year, all our receipts came to 7,000, all our payments 6,004. Sika our bank is here 600 cities. So we ended the year with 600 cities. If it's a business, say a business, it is very much alike. Just that the terms change. Instead of making for business people that are here, I'll show you how your accounts also go pretty soon. Now to the income and expenditure. On say, I don't have the opening balance. In the receipts and payments, so come over at the beginning of the period and I brought it. But income and expenditure doesn't show opening balance. Into offerings number, tithes number, fundraisings can number. Interest on investment. Your investors can be baby. And then your interest. 1,500 cities or so. It has to come because it is our income. So now from your receipts, you are picking what is an income. Then you get your total income. You find that under the receipts, I had a loan, but I don't have the loan here. Because the loan is not an income. So these are what we can consider as our incomes. 5,200. And to Ocean, receipts and payments, any income expenditure, they are very, very much alike. Because our receipts and payments will come here with the exceptions. With those that are not part of our incomes, we just take them out. Then we go to the expenditure. Fuel and transport, we saw that in the receipts and payments. It's also here. Hey, that reminds me. Please give out the handout, yes. Because people can refer and people can be jotting things inside the handout. There are two separate ones. For now, we are treating the basic account, so give out the basic accounts. Okay, check and see whether you can follow up to where I am now. I think I'm page 3, slide 18, right? Okay, slide 19. So fuel and transport, 400. Salaries and allowances, 2008. There's a protocol figure of 400. Interest on loans. This is an expenditure we are making. It didn't appear in our receipts and payments, but it's appearing here. Now, in the receipts and payments, the building project was 2,000. But here, I don't have the building project. I have just the depreciation on it. Because the cost will not come here, but the depreciation is what will come. The figures are not properly aligned, but the total comes to 4,002. So we have our income, we have our expenditure. The income was 5,200, the expenditure 4,200, meaning that our surplus will be 1,000. That is excess income. As I said earlier, if your income is more than the expenditure, we'll call that surplus. But if the expenditure is rather higher, it becomes a deficit. So we are finished with the receipts and payments, the income and expenditure. The last one is the statement of financial position, the balance sheet. So let me show you how it also looks like. you need your assets. So land and buildings, we are assuming 50,000. Maybe a company no answer so no car. The value is 22,000. Your investment 5,000. We have the total. We have stocks 1,000. Accounts receivables here. It's a business away and you car. You put that one to here. Then your cash balance and your bank balance will also come. So if you add this 77,000 here to this 5,006, you have all your assets, 82,600. So in a typical balance sheet and a statement of financial position, you will find that your assets will be listed and your liabilities too will be listed. Into your assets, with the investments, these are fixed assets. These are our current assets. Then you have my total assets. Then when you go to the liabilities side, you can say liabilities relate to those we are owing. We start with the accumulated fund. The surplus in the income and expenditure, which is like profit to us, we add it. If there's a loan we have taken, the loan comes, then your other current liabilities will come. Accounts payable. Those that are owing you will go under the assets. Those that you are owing, we put all the figures together, we write accounts payable. That means these are things we have to pay. Then departmental holdings will come. Maybe it's a church. Departments are almost more than we total, we'll put that one here. Then you get your total liabilities. And so when we say your assets came to a total of 82,600, our liabilities to have come to a total of 82,600. Balance sheet there, essay balance. Essay balance in the sense that we can access it must be equal to liabilities. That's accounting. Whether it is non-profit making organization or a profit-making organization, your assets must be equal to your liabilities. As in, it cannot be. Is it the way accounts are prepared? It stands on two legs. Assume you go and borrow 1 million cedis. It will be in two legs. It is a loan, which is a liability, but it's also a cash, which is an asset. So, say no quantity transaction why we have balance sheet now. Liabilities are your loan 1 million. Assets are your cash 1 million. I balance it. It always stands on two legs. Until once one item will go to the left, the other item will go to the right. So account will always balance. If it doesn't balance, it means that there is an error somewhere that we have not treated. Something has been omitted or overstated or understated. Otherwise, it has to. Now, you are not the ones who will prepare your accounts. Other people will prepare. But this training is to help you appreciate the things. Yeah, the trewa. Well, otherwise, the trewa says, so the idea is that now you can be searching for yes, no. So that is where you can even ask we bought drums last June, but I'm not seeing it in the accounts. But it has to be in the accounts. First, we paid for, so it has to be in our cash book or the receipt and payment. Second, it is an asset. It has to be here. So maybe when you get home, you can call for last year's account and then see the items, especially you look for the balance sheet and then see whether you see the assets there, the liabilities. The liability will let you know the people you are owing. And then you can ask a question, why is the liability so huge? And then that can help you balance a few things in there. So to end the first part of our presentation for churches. There are 3 slides continuing for business people. The same thing, just I'll give just the inferences. The reason why you are a church, but you must prepare an account is for transparency. It is for accountability. It is for regulatory compliance. It is for effective financial management. Never say that, oh, we will not prepare any accounts. We work through the leadings of the Holy Spirit. So there's no need for accounts. We trust our people. And those who are running churches, I will beg of you, don't put one person in your accounts office. It is a no-no. And you must be 2. One should be doing the recording, the other should be doing the physical accounting. They should reconcile. Because money has a way of dribbling you. Because where there is no supervision, there is no controls. So I have here the above are crucial for maintaining the trust of the congregation and stakeholders. There are people in our churches, the only reason they give and give of is because they trust us. If you don't trust the pastor, you can shout from morning to evening. Maybe say, I'm call program said, well, say one of our churches. But when they preach, so often they preach or fundraising. And that's maybe sorry, I'm can say, awful. I preach you, I'm preach you, one Ghana. Just who preach you, who preach you. Once it now, I just say, no one. So please be open. Ensure that there is transparency so that once the members trust the system, when you talk about money, unless they don't have, but if they have, they will give. But if they don't trust, people have contributed, and we're not talking about the land. We have not mentioned anything. The danger is that once you have announced that we are going to buy a land, so let's raise money. If you raise the money, they will assume you have bought the land. So you must now be forthcoming with information. They can say, but can I raise here 40,000, 5,000? Then they know that we didn't get all the 40,000. If you don't give that information, so they will assume, and they'll be asking. People will be asking questions. They may not come to you. Because you are not giving information. So that is very, very important. Say, we are our business. And yeah, sorry, you are running a business. This is how your income statement and our profit and loss account will look like for those who are doing business here. You always start with sales. So you need to total all the sales you've made for that period. Say 1 week, say 1 day, say 1 month. You need to total everything. I'm assuming 94,000. Then you deduct what you call cost of sales. Okay, elementary school, and say selling price minus cost price is equal to profit. And you say, okay, yeah. Accounting. And that's what we do in accounting. Sales is the selling price. Cost of sales is the cost price. So for those who are doing business here, to prepare your accounts, basic thing is what say. Just go through your say recorded there, and I suggest you record so that you can easily total them. Put the figure there, deduct the cost, how much it costs you before you sold the item. What you will get is called gross profit. This is the fundamental thing. Yes. Our online people are not hearing. Okay. Great.
We're hearing you very well and enjoying it.
Okay. All right.
I wanted to check whether you address them after the visit or they could interject.
What do you suggest? How should that go? Okay, so So I can go ahead and answer, or we should reserve. Okay, so you read and let's handle it.
And Mr. Imambelu is asking, my question is, when someone purchases something for the church and you don't know the amount, how do you record it?
Okay, that's a good one.
And must all assets be recorded as cash?
Now, to the first question, a member of the church buys an asset, let's say drums, set of drums for the church, or speakers for the church. We don't know the cost. Now, the person, we need to contact the person. Some will say, that is good. But then behind the scenes, you, the one in charge, must talk to the person that we need the figures for our records. Number two, so when you say documents, you see, these are assets. We must have a document covering it. So you put the person to at least do a copy of it for you. On the document, you will see the cost, and that's how you record it. So yes, the person doesn't want his name mentioned. But the important thing is that how much did it cost? We need that for our records. As soon as the person is not forthcoming with that one too, you say, market actually a similar speaker and drums, how much it is costing, and then we can use the value for our records. But I suggest that we should find a way of encouraging people who donate things to us to give us the cost as well. In fact, give us the document. Sorry, what am I car papers now? How do we process the car? So that will be the answer. Then all assets are not in cash. No. Cash is also part of assets, but assets come in various forms. As I said, there are different types of assets. So you can come in the form of a motor vehicle, you can come in the form of furniture, you can come in the form of a cash item. But then not all assets are not in the form of cash. So that was my answer to the second question as well. There's another one. Okay.
If the church has no money to pay for the auditor,
okay,
how do you audit your accounts to
if the church is a small one, relatively small one, you may not need a chartered accountant to come and audit your records for you. In fact, among your members, you can get someone who has a background in accounting, not a chartered accountant. The person may have maybe SS accounting, but the person understands how we do it. The person can do it for you. As the church grows, then you have to get somebody who probably has a diploma or a degree in accounting to help with the auditing process. But if it is a full-grown church, we suggest that you must get, even within the church, someone who is an auditor to go through that for you. So the issue of money shouldn't be if it is a small church, maybe we can get someone around to be helping us. The person may not even take any money. As the church grows, let's put some money down to pay for whoever will be auditing the records for us. So that's the answer I'll give to that one. So let me come back to the business people. Maybe we'll come back to the online, and if there are still questions. So those of you listening to us online via the Zoom, you can still keep posting your questions. We'll address them. So for those who are into business, I'm saying that all the things you have sold for a particular period, add them. You have your 94,000 cedis here. And then the costs, all the costs you incurred before selling the goods, you also need to put them there. 66,000 here. You get gross profit. From the gross profit, you come to all other expenses that you incurred and paid. You deduct that from the gross profit, what you have is called net profit. So this is the basic thing that businesses should do when they are preparing their accounts.
The last one.
Okay. After the gross profit, expenses that you may have incurred and paid, rent, rates, salaries, telephone charges, insurance, all those expenses, you put them together. I'm assuming we had 16,000. You deduct it from the 28,000 and you get, hey, no, that's 28 minus 16, what do I get? Okay, so please, online, the figure is 12,000 and not 14,000. Well, the two would have been 30. Okay, so it is 12,000 and not 14,000. So those with the hard copies, kindly do the corrections in there for me. And Admins, I don't know whether you can do the correction on it for me. This 14,000 is actually 12,000. The challenge with some of the items here would have to do with details. And I'll show those details pretty soon. Wait, what am I? Okay. The 14,000 is 12,000. No, but don't worry, if we can just go on. All right, so the business people that are here, please take notes. You always start with your sales. Always remember, selling price minus cost price is profit. This is very basic. So find your sales, add them together. Deduct your cost from it, cost of sales from it, you get a gross profit. Find all the expenses, deduct them, you get the net profit. I'm going to show you an elaborated form of this. The same thing, but as soon we made sales of 100,000, 5,000, 2,000, 3,000, you can't even boom in 100,000. When you sell goods, sometimes your customers retain some of them. So that must be deducted. So we have 100,000 sales made, but we have sales retains. Let me ask a question. Why would your customer retain some of the goods you have sold to him or her? They may be expired. Maybe among the demand, be a part of 5 chairs, back on 9 in year. Substandard products. Another reason why we sell goods to people and then they retain some. I'm finding about the back say so we in 9 year we are pro. So there will be sales returns. So you deduct it from your sales to get the net figure. Then the cost price, which is the cost of sales. To arrive at that, because I don't know, to me, you don't just get up and then you pick the figure. You start what we call opening stock. The answer I just started business, saying how many chairs were there? The value 18,000. Then how many more chairs did we go to buy and bring? I've written here, including carriages. You are doing business. You went to town to buy some items. And then the taxi driver took 1,000 cedis as transport. That 1,000 cedis is part of the purchases. Sometimes, business people don't do, and it affects them. When you buy the things and you are cutting them or transporting them from the market or wherever you bought them to your warehouse, the transportation costs must be added to the purchases itself. Otherwise, overbook. So I've written here, including carriages. Then the way I would tongue, I bet me DB abano. Once you sign, I want to kota. With me DB asako, because you will find that when they were giving me the things, I didn't check. This one is no good. This one is sports. This one is this. So you return them. So if you return anything, you deduct it. And it will give you what in accounting we call goods available for sale, GAFS. So the stock we had at the beginning, the purchases, we have to add that. Anything we have returned, we have to deduct it. You get the goods. So this is what we now have that we can sell. Don't forget, we are trying to get our cost of sales. Then at the end of the year, any stock you have left, you deduct from the goods available, you now have 66,000. This is your cost price, the cost of sales. So you sold the thing for 94,000. It has cost you 66,000. When you deduct your profit, your gross profit is 28,000. So the previous table I showed you, the summarized form, this is how the elaborated form will look like. Nti business wa hano. O tong ade na say side de bi ba, ye de bi sa echiba e se otifim. Sa na wonso ukoto na say bi nyina say usa oti di kwa e se oti eno nso every purchase. But let me remind you, when you buy and you are transporting them, the cost you incur in transporting them are considered as part of your purchases. So you add it to the purchases. So this is how the elaborated form will look like. After your gross profit, you now have to deduct expenses. So we have here a gross for 28,000. We add other incomes to it. Then we start with the expenses. So examples are administrative charges. Into rent, insurance, rates, salaries, allowances, they all go in here. Training, seminar, you can put all of them. So we share most accounts, on some more notes to the accounts. So this 10,000, when you note what we added together to get a 10,000. Then financial charges, maybe a YG Glimps loan. It's kind of what you are interest count. The interest will show up here. Then, if you depreciate any of your fixed assets, it will also show. Again, you work out and you get your net profit. So, the previous slide I showed, which has a summary, sales, less cost of sales, gross profit, less expenses, net profit. This is the full form of it. When your business, no balance sheet to say in balance sheet. The difference is a term. For example, the churches will say accumulated fund, but the business people will say capital. So in your balance sheet, we don't expect to see accumulated fund. We expect to see capital because as for you, you are in business. So for a business person, your capital, any profit you make, this profit of 14,000, you add it to your capital. You want to know how your business is growing. So if your capital is 20,000, you add the 14,000 to get 34,000. During the year, business people have a way of taking back some of the money they have invested. And for good reasons. Me a businessman, but in quite a school, I send me to school fees. Me instead of need any other money. So I can come into my business money, take some to go and pay after I am a business. So any money I take from the business for my personal use, we call that drawings. You deduct that. I think I have something I can show you quickly. So for business people, this is how that section will look like. Your capital, I'm assuming 53,000. Add the net profit to it, you have 67,000. You less drawings. Into capital one, profit be baby, or the capital no. But it can be a year for business, because you have taken out that money, so you deduct it. So this is like what your new capital will be, 6,600. Then if there is any loan, long-term loans, you add up and you finish the liability side of your balance sheet. I'll pause here. Who question be online and in person. If you have any question, we'll address it now. Yeah. Efra. Message say, assume say ne pa no ton jene oton meko and oton banchi. It will be difficult to prepare accounts for banchi, accounts for jene, accounts for into no you be carry nyina bom. Into you try sales now. Sales never ye sales for cassava be I know 3,000. Sales of tomatoes be I know 2,000. Into no near here pan say keep records. Want to me entro obia the auto because you are busy. Make a crowd home baby. But then at the end of the day, you can count all the money that has come to you. When say these were sales we made. So 5 cities, 10 cities, 20 cities, 25 cities. Scanning you are keeping them. So when you finish, just count all the money and write that as your sales for the day. Into sekano ye jene wom cassava wom we nso bibia wom bi. But say ope say which of the items is giving you profit, which one is giving you loss. There will be a friendly departmental account. Let's just say, as after the repair, we are cassava dear. No, I tomatoes dear. No, I Jenny dear. And the me which particular area is bringing you down. You know, my old tongue, 3 or 4 different things. One share you won't know which of them is giving you more money and which of them is giving you less until you keep the records. If you have the figures, you can easily tell. And to say, which of them is giving us good money there, and then keep records for each of them. That means your tongue cassava, emphasis can be from. Your tongue say we better tomatoes as can a different pocket. We better Jenny as can a different place. That is how we can tell. But as I say, we don't have the personnel to do all this for our internet. It is kind of a boom. Yeah. Yes. Okay. Just for those online to hear our question.
Okay, so I'm talking about churches that sell items. How is that treated? Because from the
first one was for churches, and this is for business. But now you're asking, what about if the church is into some form of
maybe selling Bibles or
okay,
has a canteen or something?
Okay, all right. There is something the regulators require that churches can prepare. We call that bar accounts, bar trading. So if it is Bible, we can call it sale of Bibles. So we can prepare a small account for it. And it will look like this. It will look like a business profit and loss account. So sale of Bible, 94,000. How much it has cost us, we deduct it. We will not call it gross, but we will call that profit from sale of Bible, so that it will be very clear that it is not the normal business that we're doing. And then the final profit you get, you transfer it into the income and expenditure account. So if a church has some item, maybe we are selling tapes, Bibles, books, other materials. Churches can even have church clothes that we are selling. We all have to prepare the account the business people prepare. But then it is not separated from the church. So when you finish, whatever profit you get on it, you transfer it into the income and expenditure account as your income. As your income. Yeah, so before I come to...
Is it not best to separate the business side? Yeah. I'm saying that, is it not best to separate the business aspect of the church from the main income, profit, that's income and expenditure account of the church?
Well, when you do that, you then subject yourself to the tax elements of the nation, because you have declared that you are doing business.
Oh, okay.
But the understanding is that it's a church. We can have a canteen that we are running. It is not really for profit making. It is just to entertain people who will come around. So that is why we don't prepare full-fledged account for the one. You prepare a simple account. We sold so much. It costs us so much. Then this is the profit we have made on it. We transfer it into your income and expenditure account.
Okay, I'm saying this because some churches have buses that they...
No, those ones are complete businesses on their own.
Okay.
So in that case, the church will have to prepare a full business account, and at the end of the year, go and pay the appropriate taxes on it, because that one is a full business. But if it is a church that is just conveying your church members to church, sometimes they don't even pay the fare, or they don't pay the right fare. We'll still have to come to this one. Sales, maybe fares came to so much. The cost of our fuel and other things, deduct whatever is left. If it is a profit, we transfer into our income and expenditure.
Thank you.
Yeah. Okay. All right. So, so much for basic. Sorry. Your hand was up.
I want to find out, how do you cost for loss in the sense that maybe you sell perishables,
okay,
and some goes bad.
Okay.
Vegetables and stuff, we know some go
Yeah.
bad. So how do you value that?
Okay. Now, you bought these foodstuff. Let me assume you bought them for 5,000. And you were able to sell, of course, 5,000, you're able to sell about 4,000, and you have 1,000 left. But then these 1,000 worth of vegetables there had all gone bad. When you're preparing, as a business, when you're preparing your profit and loss account, this 1,000, you write that off as part of your losses. You can value it based on the difference. I bought it for 5,000. I have sold 4,000. Worth of vegetables. So what I have left is 1,000. This is what I couldn't recover. So this is the cost I'll use in my books as my loss for that particular product. Yeah.
Let me get something.
Yeah.
So with the 4,000, that is without your profit.
It includes your profit, but your things are gone bad, so you can't declare profits.
No, because if I have 5,000 worth of goods, and I know that at the end of the day, I sell it, I'll be making like 8,000. So if I am able to sell 4,000 of that, product, I've made a profit. So maybe selling the 4,000.
No, but you have made a profit though, but Nyamani being so assessed, and it's a loss to you. So you can't go and say that the 4,000 I sold, there was profit of 500 on it. Nyamani be assessed. So your profit then goes to defray the rotten ones so that you can continue to stay in business. All right. Any other question? Good. I'll plead with us to be on our feet once again. Before we move to the final session of today's training and seminar, we are here at the Frimpong-Manso Institute. Let me see is it forefinger they call it? Let me see your forefinger. The right hand. We are writing F-M-I. So let's go. F, the letter F, the letter M, and the letter I. That's from Frimpong-Manso Institute. Okay. Now we use our head to write the FMI. It will clear the tiredness from our. So now let's go. F, the letter F, the letter M. Some of your M going through your F. And then letter I. All right, please take your seat. In the next 30 minutes, we'll talk about managing my finance. And then you ask 1 or 2 questions and we close. Please give out the managing my finance handout. If you didn't get the first one, you can call his attention, he'll get you one. Someone has said that only the wise can see a bone in an egg. What do you understand by that? Is it true that there can be a bone in an egg? How would that be? If you allow the egg to hatch, and then you get your chicks, and then they grow and they will develop the bones. And that talks about savings. For most of us, we don't have the mind of savings. And that is, in fact, it is of savings. We hardly save. And you know our problem? There's something we call the vicious cycle of poverty. So we are complaining of low income. Because I've convinced myself that my income is below the necessary level, I end up with low savings. And then because I save less, we'll have low investment. And because investments are less, we have low capital formation. And most of businesses are capital near small amounts. And because of the low capital side, we end up with low profits. Business now, we capital is so you can't make huge profits. And because our businesses are making low profits, they also pay low income. It's another cycle. And that's the story of Africa. For most of the developing countries, this is what you will find. You find a vicious cycle of poverty. Vicious cycle of poverty. And the same goes for a family. If there's a family and the family is not forward thinking, my man is 17 years and I'll 5, I family 16 years, and also 5, 15 years, and also 5. Then you find that the poverty continues because we were not prepared financially, we were not financially sound, and then the same mistakes are a January year. The vicious cycle of poverty is one area we need to break. If we break, managing our finances will be a matter of course. And the Asian story, I can say Malaysia for at independent, the difference was savings. The difference was savings. Compulsory in some of these countries, you will save. Over here, I don't think we can pass a law say tension of income. But it is savings. As we save and save, the investment will go up, then capital formation, it will change the narrative for us. But we have grown in a society where a hand to mouth. And we have convinced ourselves that I can't save. So we continue in this. I saw this somewhere. I thought I should use it as part of my introductory preamble. Difference between rich and poor nations. It said Egypt and India are said to be over 2,000 years old, but cannot boast of riches. Canada, Australia, and New Zealand, some 50 years ago, were inexpressive, but today they are counted among the rich countries. So it is not in the age of the country. Whether the country will be rich or poor, it's not in its age. Say, independence, no. It is not in the availability of natural resources. In fact, if it were in the availability of natural resources, Ghana shouldn't be a poor country. But natural resources, the minimum. Japan has a limited territory, 80% mountainous, inadequate for agriculture and cattle raising, but it is regarded as one of the powerful world economies. Switzerland does not plant cocoa, but they are the best chocolate in the world. How that happens? And to say, share why some countries are rich, others are poor. Adam Smith, it is not in the availability of natural resources. Who are natural resources? But history has shown, say, a boom will be, but they kill themselves over it. It does not lie in intellectual differences. Studies have shown, my experience has shown, that there is no significant difference in intellect between developed and developing countries. We don't have that. It is not in race, it is not in sex, it is not in height. When Americans told the Asians that almost flat nose, almost also until they will not see development. Today, they have changed the story. So it is not in the flatness of your nose. It is not in race. Say, blacks. People have said that we are black, that's why we are not developing. And the answer, so we are not moving. Rich countries are not all necessarily whites or blacks or colored. There were some examples I was going to give at many times, so let me go on. How do I give, or how do I define managing finance? This is the operational definition I have here. Combination of planning, monitoring, and adjusting your financial activities to achieve your financial goals. What it means is that Wankasa, I say on your financial goals, my goals with respect to my finances, my aims, what do I want to do with my money? Then you adjust yourself. It's the adjustment that is our problem. If I bring any more adjustments. No. In advanced cultures, obiura politics more. Obedin, the person wants a name. In our part of the world, obiura politics more. Upiska. There are some basic concepts I want you to get some understanding on. Revenue. Proceeds from sale of goods or services. Another concept is profit. Proceeds available after expenses. And see, the profit. But revenue, the idea and you can't take that as a profit because what tongue? But when you cowboy in frame. Assets, we have explained what an asset is, so I will not belabor it here. What you own. Liability, what you owe. You owe, it's a liability. If you own it, it's an asset. Savings. Any income you earn that you have not spent is classified as your savings. So the slide says income not spent or deferred consumption. And I say me use this kind, but my end say me use it later. You have saved that amount. Investment, the use of savings to produce future income. Your ungrophobia, they save, but they don't invest. And you see you're wrong. You save with a view to investing. Because Scano will invest when you more since savings no more. In a recent history of haircuts, Nkrophobia say, should I still save and invest? My answer is still yes. Just that where you put your money, just check the surroundings. I'll give you some questions you must answer before you put your money into anything. Treasury bill, your money with the government. Fixed deposit, your money with the bank that you go for later. Call deposit, and I say call account, your money with the bank that you can call for at any time. and then shares your money with the companies. And this is how it plays out. What do you see? Because 2 companies more if shares. You have invested in shares, and then they will give you some dividends. What do you see? Can a buy so far to a treasury bill? What do my bank say? You come for it later. I have fixed deposit. What do my bank say? Anytime I'm here, I'll call. It's a friend call account. I'll call on you for it. And your call account, and I say call deposit. As I said, these are concepts I just want you to understand. These things, we hear of them, but people have difficulties appreciating what they mean. They are very simple. Misika wa bank a treasury bill. Misika that bank. I'm going to later. A fixed deposit. Misika at that bank. Me to me akwaji as and when I want it. A call. Misika at that company we must say. I know the year almost check dividends are. Yeah, means so many be shares. Very simple. To manage your finance, I propose 2 things. 1, increase your income or revenue. 2, reduce your expenditure. But then you better answer. How do we do that? Church 1 or 2 bina. If I have to manage my finance, I'm proposing 2 things. Increase your income, reduce your expenses. You must be deliberate about that. You must decide to do it. And this so let's start with how to increase my income. I have hard avenues and soft avenues. Hard ones, manage the current income flow. The moment you tell yourself that, oh, every month every month you will not manage. Because then you develop the attitude of scan a bar, they use. Because if you did I say a baby. COVID, thank you. COVID we were boom to see how would you, because I was listening to EcoBank expressing back is it Mr. Mante? I say you entire car for 3 months. That's a win to mention now we here. So for the next 3 months, maybe I would you a to a friend skebia mba na say win to mention na and we here. And I answer you dear no. Answer na salary in Kabelandi no. Nasa. Ready? So move away from just assume for one say maybe this man dear no emba. Let me manage it. It will help you. Number 2, get other sources. Well, I'm talking about increase your income. Get other sources. Of course, it must be legitimate and legal. Because one share say, and the pobia bonipo, I bet you. Plow back profits. Business be a when you make 100 cedis, don't start spending and spending. Out of the 100 cedis, maybe you can take 20, not 80, add it back to your capital and grow that small business. JFM interview, maybe. So, Jamestown her side. Ejumoye say she cooks water. Until she will get it, turn it from cold to hot. And people come and buy. They buy the hot water for whatever they want to do. And she said she's been doing that for 20 years. And I journalist business, and for the last 20 years, what you are saying. She was so proud of that. But onimnia, my many person 20 years. The same coupon to say the same chinsa say 20 years. 20 years. Maybe that is where you will start. But then after 5 years, let's see that things in when you be after there you are moved, when you container B, then it means that you have. But the point is that for most of us, most businesses, we use. I got say typical farmer have a snibas in Niska or whatever Baba. Because there is a good harvest. When you profit. Connect with customers. Your marketing force say your customer is always right. Whether it is true or not, I can't tell, but they are the professionals. I want to say you must treat your customer very well. Nepa no so best have a few more. It depends on how I will handle the panel. But for some of us, we better have a general when yeah, who is around? When I want Nipa need time, so after 10 seconds, 20 seconds, you can be sure the person will not come to that place again. Or he comes, and then there's this young boy or young girl. Prices are over crowd or church and hostile. Your business will go down. So connect with your customers and teach. If you have 2-3 members helping you, teach them how to relate well with the customers. Well, if your customers stop coming, you'll be in trouble. But the same thing with church. I was reading about Mahatma Gandhi. Now, or first church also where you can find the true God. First, I hope say yes, God there. Drew Asha no share Natalie. The man intentionally dressed shabbily. And then you say no, with this dressing you can't enter. It's outside. The manekunya outside. The following week or by and it's manekunya outside. And that was the end. Also, the true God cannot be here. Because the true God is here. They would allow me, despite my and I will pay 18 in case transcendental meditation. And what church in free a call say Ashes yan training. So even in church, sometimes the little things, your members will stop coming. Until check your ashes again. Don't let it be like we need maybe a get people who want to do it and train them. So check your customers and connect with them. Then ensure that you have effective controls. Some business people are doing so well, but because the controls are very weak. Boys, and girls, no turn. I want to show the BAC. Man, be a mekoye na accounts man or mokola. The boys no warehouse on some upia. The pan ura or slim, upia wa epofu. No knowing say, almost on singlets near the boys no ura, no much singlets no be no much matter the I so. No peja, they know the trip. And say, upia, all the singlets, then they'll be selling it. So this one goes out slim, comes out but there. This one goes in slim, comes out but there. Nobody area. So the man was always complaining of the stocks. I've been sitting here too. No, it's a West, no share, almost share singlets, no, or share one, no, I share two, no, I share three, no, I share four, no, I share five. No, repeat. Okay, yeah, or be more, no, I share be. If you don't have effective control systems, you know that you are doing good business, but you won't see the money. You chase a car, let them issue receipts. Occasionally, go there, check with them, and say, and then how much sales have you been able to make? Because I also will train us at the some before they come and render accounts. Mate, I was surprised when I saw that thing. Call Kaswa Makati from Malam Junction. I was driving and I saw the scene in a flash. Met me see kasa now this could be man. Madam Fubi. No, so I call back to the car. See hey, see no drop his canema. See when it say by the time I did best why savings. Until who driver and you'll be wondering, say, I'm with the person in the car. Where did he go? He has not been anywhere. You wonder, but what I'm saying is that let's have effective controls. Otherwise, you'll be doing good business, but you won't see the money. The danger is where you are seeing some of the money. So you're okay. Meanwhile, no, you could be earning more, but won't fall into form share. I don't know, but some of these people, you hear Juma, mana, or they didn't kwasa. I didn't no we are companies. Let's have the effective controls in there. Get access, save, invest, and it will help. Soft avenues, still on increasing my income. I need to apply my talents. By all means, work. Improve on your skills. Manage your time very well. Obviously, time is money. Obviously, time worked for is money. Manage I think that was the word I wanted. Manage the human resources well. Manage them. Of course, for us Christians, prayer is not to be left out. And if you don't pay your tithes faithfully, please pay. People pay, but they don't pay faithfully. That's the problem. And some don't pay at all. But let's pay and pay faithfully. God knows how to bless his people. Professor Frimpong-Manso said, if you don't pay your tithe, you are a greedy person. If you don't pay your tithe, you're a greedy person. It's really a greedy person who will not pay tithe. When you remember 10, see, for 9, I bring me 1. It is a greedy person who will take the 9 and take the 1. I go be say, or pray for contract B. The contract was 10 million Ghana cedis. But year negotiation be every year, no. The contract price came to 9 million. The second 9 million say, I didn't know where you need that. Because the price came from 10 million to 9 million. I was saying, come in tight. Where you need 1 million until 9 I can do. Yeah, need that. Avoid laziness and dishonesty. In fact, the Bible says, Psalm 10 verse 4, lazy hands make a man poor, but diligent hands bring wealth. Verse 21-25, the desire of the slothful killeth him, for his hands refuse to labor. Then Ecclesiastes 9:10 says, whatsoever thy hand findeth to do, do it with thy might. Some of us, laziness is our major problem. It is the reason why we are not making money. I'm saying some. Avoid dishonesty in your business dealings. Luke 16, whoever can be trusted with little can be trusted with much. Verse 13, 11 and 12 says, dishonest money dwindles away, but he who gathers money little by little makes it grow. For most of us, we don't have the patience to be gathering money little by little. Say, may savings, 5 cedis, 10 cedis, 5, no, you're per 100, 200. And the 100 and 202 is not coming. So we don't make any move at all. But if we start with 5, 10, 20, and we keep on 5, 10, 20, before you know it, you've grown the 10. How do I reduce my expenditure? Avoid impulse buying. Impulse buying here, we will market. One plan is better, so I don't know. ADFO, then you pay for it buy. ADFO, no, at all. Who consume what 3 things are you're not buying 7 things. Sorry. Our wives. You don't know some men. Avoid ostentatious demand. I don't know, but I don't know where people are picking this life from. If it is, I hardly use wristwatch because I've convinced myself that set time pana me pedia and on my phone also. So if I put on wristwatch, it is dressing. But obi watch our channel, a bit not to car. Watch no one bit me to car. And I ask, and no amount of time now, I care about eternity in your man. If you have the means, fine. But if you are trying to come up, some of these things, let them be for now. Spend within your budget. Number 4, minimize borrowing and credits. I'm not saying don't borrow, I'm saying minimize it. So you can start, maybe the first time you borrow 100,000 cedis. The next time you want to borrow 50. Because then we want to assume that with the 100, no, you have been able to work out a few things. Then from 50, come to 40. 40, come to 30, come to 20. Then you get to a point where you are no more borrowing. But for the past 20, 30 years, Nana say, borrow. Won't move anywhere. It is just like the normal human life. First, no, we buy on credit. I go buy Gary on credit. I buy Kenki on credit. I should get to a point where now, when I go there, if I was buying 20 cedis, now I should be buying 10 cedis on credit and pay 10 cedis. Then I should get to a point where now when I go, I have my money and I pay for. And in fact, I get to a situation where now I pay in advance. That means I'm progressing. The analysis won't get anywhere. Another way we can reduce our expenses by tracking our expenditure. Sometimes just sit down and check how much you are spending and where the money is going. Most of our young ones, the money is in phone credit and bundle. 10 cedis, 20 cedis, 10 cedis, 20 cedis, 20 cedis. If you had to sit with them to add up, they would have spent 500 cedis in a month. Onye maybe but the phone credit in the bundle, 500 cedis a month. In fact, young adults, you can even try it. For those of you who like social media, you're always on the internet. Check through your phones. Check the amount you are using for phone credit and bundle. You find that, hey, I'm really spending. So we are making money for these telcos, seriously. I'm not saying don't use your phone, but whatever it is that you're doing on your phone, make sure it is giving you better returns. So if you are spending 1,000 cedis, you should be getting maybe 2,000 back. Then you know that you are actually doing something good. Avoid all forms of waste. One area we don't check between electricity so jaho chrome. Because when you know it's the company that pays, it's the father who pays, it's the mother who pays. So young ones can put on TV. You buy gas 3 days. Because they didn't see just they put the thing on fire, then they go and feed it with their phones. The gas will run, the food will be ready, there'll be nobody there, the thing bends. Let's try and avoid some of these to help out. The soft avenues of reducing expenses. Break the vicious cycle. I've talked about the vicious cycle. Break it. Avoid unnecessary comparison. For some people, you are comparing too much. The Bible says that they compare themselves one to each other because they are not wise. Reduce your time with the phone. Avoid reckless friends. There are some friends, they always make you spend aimlessly. Hold on to your integrity and then meet the needs of the poor. One of the areas we can do well is helping poor people. In Shirawum, let's do that. These are the other considerations I want to explain and we close. You must understand the business environment that we are operating your business in. There are some questions you must answer before investing your money. There are some principles to work with. As for the 10 things to do, they are there, but I will not talk about them because our time is up. There are 6 environments we do our business in, we do our church in. The political environment, the economic environment, the sociocultural environment, technological environment, ecological environment, and legal environment. If you are managing your finances, make sure you work within all these environments. There are environments you can influence. There are those you cannot influence. These are the ones you cannot influence. We don't influence the political environment. Even when it comes to elections, you have just one vote. So you don't decide who becomes the next president. Even your vote can help in deciding. The economic environment, the inflationary rate, the devaluation of the currency, you don't have control over them. And answer what the dollar need to 10 cedis, do 12 cedis, so you'll be hearing it, and you have to go by that, but you don't determine it. So it's your cultural environment, the same thing. We don't determine the technological environment. Technology keeps changing. We don't determine the ecological environment. It has to do with natural disaster. Sometimes you locate your business in an area, and then flood can destroy every investment you may have made in there. Legal environment. Whether it is church or business, make sure you are within the laws. Because one thing can just happen, and all your investments will be gone. What questions must I answer before I invest my money? Question number 1, you must answer. What are the expected returns? This one area, that we get, and rightly so. You need to know the expected return. But let me say this. So returns near too higher. And for too good to be true. Because the question is, Ejima Ben and company be yeah. Me amount 50% per month of the amount you are putting. 30% every month. Ghana, Ejima Ben pan and this kind of year I'm with me. So if it is too high, I would suggest you advise yourself. Is the company under any regulatory body? When I started, I told you that Glimps is a member of the Microcredit Association of Ghana and is registered with the Bank of Ghana. It's a regulatory body. So you can be sure that if Glimps acts untoward, the regulatory body can take Glimps on. In the answer, ask yourself, is it under Security Exchange Commission? Is it under Bank of Ghana? Is it under NIC, National Insurance Commission? If it's a financial institution, it must belong to a body. If it is not, advise yourself. Another question you must answer is, how is the money going to be used? As I asked earlier, I'm talking about 30% every month. Mekai R5, resource 5,000. And then what was the twin one? Piram. Alrighty. And then recently, men's gold, men's diamond, and then women's silver. If you don't ask these questions, you don't find answers to them, it's difficult to get. And if you get it, you don't manage well. How safe would the investment be? It's a question you must answer. How safe? Question number 5, you must answer, what are the risks involved? When it comes to finance, there are risks. Inflationary risk, devaluation risk, all these risks are there. You need to consider them. And the last question you must answer before you invest is, can the investment be liquidated? Liquid means money. Can I get my money back? How easily? If I need my money by next week, how easily can I get my money back? Because normally when they put so many encumbrances on your way, it's a way we answer, it's a way we answer, it means that there's something not too good for you. These are questions we must answer before we invest any money. These are ways we can manage our finances. Otherwise, can't do it, but you'll be throwing the money away without knowing. There is the ant principle that has been suggested. I will work with Proverbs chapter 6. There is the Joseph principle. Once we know what's ahead of us, we should be able to plan towards it. There's the Adai principle. This one, Professor Stephen Adai. Professor Stephen Adai says, when you earn your income, The first 10% is for God. The second 10% is should go into your savings, and then use the 80%. So he called that 10-10-80 principle. The first 10% is your tithe. It should go to God. The next 10% is to go into your savings. So don't say the money is too small. You are being paid 500 cedis a month. Work 10%, put it in savings. The rest of the 80, they are for you. And in fact, he explains that one year, that's over 100, your life will not change. It will just be like same. So rather, no, give God his part, acknowledging what he is doing in your life, and then invest 10%. Because if you use all the 100%, your life would just be the same like using 80%. So why don't you rather do the needful? Then there's the grateful heart principle. I got that from Professor Frimpong-Manso's book. Some gratitude. Attitude of gratitude. Thank you. Most of us, we don't know how to say thank you. And so it is difficult for more blessings to come, whether from fellow human beings or from God himself. But you can be sure that you're getting more. Brian Tracy has what he calls the loss of money. I think I'll end on that one. The first one he calls the law of abundance. I say money is in abundance, just that there are laws governing it. So look out for the loss of money and work around it. Skadi is kawo. We catch us scanning gun and paneboa. When a scanning ubutum, but I want for cash. The law of exchange. You must always have something to exchange for money. One day, Bill Gates said, one of the secrets to his ahunyana wenyano. Also, you must always have something to change for something to exchange. Where he said he looked at problems that companies had, and then he worked out something on computer, got a software for them, they paid for. So definitely, you must have something to give out to be rewarded financially. If you are not exchanging anything, you're not getting anything. The law of capital, your wealth is your health. Your health is your wealth. Until the biggest capital you have is yourself. Wapumudin is your biggest capital. Until if you don't work out your health, you may be doing well in business, but because you are not taking good care of yourself, this good capital will go waste. Now my business, why invest? For most of us, our biggest issue is no rest. Up and down. The law of savings. I've talked about savings, so let me go on. The law of conservation. After savings, there's another step you need to take. Then there's the law, there's Parkinson's law, named after one, is it Mike Parkinson? The law says that expenses will rise to meet income. Obia Echeneka 100 cedis a month, he will manage. You talk to 300 cedis a month, he will still spend all the 300. To 1,000, he will still spend all. Expenses will rise to meet your income. So when your incomes are rising, one of the things you should also think about is being too bad. Because expenses are such that they will always rise. The law of three, insurance, savings, investment. The law of investing, I've discussed investment, let me go on. The law of compound interest. Compound interest is always better than simple interest. The law of magnetism, you should be able to attract people into your life. Obviously, there are 7 things that will destroy us. Wealth without work, pleasure without conscience, I'm finishing. Knowledge without character, religion without sacrifice. I have all of them in the handout you have. So, politics without principle, science without humanity, business without ethics. These things will destroy us. 3J say, there is an eighth one, and that is life without Christ, to destroy us eternally. Eternally. I'll pause here. If you have a question, you can ask. What question be able to me, sir? Okay. All right, so Glimps and FMI have made a provision, some refreshing provision for us. And I understand it is packed. So when you are leaving, finally, you pick a pack, and then you are off. If you registered, it means your certificate should be ready. Those online, we need to review the recorded version. And then once we see you on it, we'll prepare your certificate for you. So if you are not on the online, it means that you don't get a certificate. The unfortunate thing, well, maybe not unfortunate, the refreshment is for those who are here. So those who are online, you are listening to us, cheers. We shall refresh you online. So consider yourselves refreshed. Any question before we go? Any question? This is basically the first of many training seminars that will be coming your way.
Kindly give my refreshment to somebody and give it to me.
So somewhere in August, we'll have the second edition. And the Prof has already made arrangements. We have one gentleman that you would love to listen to. And when the flyers are ready, we'll push them out there. So please be with us as we share some of these things. And then as and when, make time and join. There is always a place of prayer in all that we do. So whether you are into business or you are in a church, I will plead with you that don't leave the prayer factor. The Bible says, horses are prepared for the day of battle, but victory comes from the Lord. Sometimes you can put down all the structures, all the things we have discussed. You can have all of them, but it will still not work. I have planted, Apollos watered, but as for the increase, it is God who gives. So there's a part we must play. By all means, play that part. But don't forget the prayer factor. But when you start, well. Thank you very much for your time. Let me ask my colleagues if there is something you want to add. Yes. The evaluation, okay. All right. So you have, okay. All right. So before you go, you will just fill some dots for us. It will help us know where to improve on, where we did well, where we didn't do well. Please feel free to give us that feedback. Don't write your name anywhere. We just want the feedback. It will help us. Okay. 2 hands online. Or maybe what you wanted to say was the voice you played. Okay.
Praise the Lord.
Hallelujah.
The program is good for some of us that were having accounting background. Really refresh our mind and our memories.
Mm.
And those that they don't have accounting background, it will be a very good item for them.
Mm.
Please, my certificate can be given to Reverend Saki, Breakthrough Assemblies of God. My name is
Okay, Reverend Saki
Bento.
is here. All right.
Yeah, he can collect my certificate. I'm Pastor Bento from Zion Praise Assemblies of God.
All right.
Thank you.
Just that he will not bring any refreshment to you.
I wish we can post that refreshment through a dispatch rather.
I want my refreshment virtually.
You want a virtual refreshment, you will get it.
Good.
Prof, you will get it.
Thank you. My wife can
All right.
take mine.
All right, so whilst participants are filling the evaluation forms for us, if you have any question online, in person, please feel free. There's somebody there.
There's no need, but Samsung SF, your hand is up. So, right.
Hello, good afternoon.
Good afternoon.
For this Reverend Ben Frimpong.
Oh, great.
Yeah, this is just a recommendation. I want to recommend you for the presentation.
Oh, thank you.
I'm praying that, like you said, it will continue. It will help some of us. I wish
right.
that maybe the advert will go for many people to join. Maybe people who don't know the essence of it, but some of us, know the essence. So I'm praying that the publication maybe can go far.
Right. Thank you very much for the feedback.
Thank you very much. God bless you.
Bless you. Okay, I think some people have finished with the evaluation. Oh, it's just the feedback we need. So
Just so that the next session we can also invite you again.
register. Okay. So those who you don't register, you can give out those details so that at the next session we can invite. But those who register, we have your contacts, so we can easily get in touch with you for subsequent sessions. Okay. All right. Prof, please, are you still online?
Yes, I've been online right from the beginning.
Oh, great. Please, we are about closing, so we need a word or two from you before we go.
Thank you and good afternoon to everyone.
Good afternoon.
I hope you're all doing well.
So, yeah.
I must say that trainings like this have always helped increase my capacity, and I don't joke with it. So if you really want a breakthrough in life, apart from, your prayer life, your worshiping life and everything, and even working hard, The Bible says, my people are destroyed for lack of knowledge. So let us appreciate teachings like this, and it will really increase our capacity. No one was born rich. Some people are even born rich, but they lose everything. Some people have nothing, but because for hard work and training and managing, we make it. Dr. Freeman said something which made me happy. We are earning less, so we can't save. So there's always a virtuous cycle. We have to break that cycle, not only through prayer and fasting and deliverance or whatever, but through character development and hard determination. So those of you who have come today, both Glimps and FMI people, start the habit of saving. Little drops of water makes a mighty ocean. Just little of your income. If you cannot do the 10, 10, 80, which is the normal rule, even if you can do 5% or 2%, it's normally a compound and a cumulative interest. They can help you. They can also even serve as a collateral if you want something bigger for your own properties or whatever. A rich man leaves inheritance. A righteous man leaves an inheritance for his children. Inheritance of a good name and an inheritance of wealth. So let us try as much as possible to take this lesson serious. I want to thank Dr. Freeman. I want to thank Mrs. Frimpong-Manso, Mrs. Enid Freeman, Mrs. Zana Ochi, Little Freeman, Betty, and I've seen Abigail, and whoever has also helped. Those I didn't see, the technicians. God bless you all. I also want to thank all the pastors, those online, and those who were present. Like he said, there's going to be another one very soon. So let us all prepare and spread the news and bring more people. People have been sending me messages at the background. We should have called more people. We should have advertised this very well. So next time, Dr. Freeman, we will also allow you to advertise it on the AG platforms for us.
Okay.
Or other areas, because the Institute and Glimps is for everybody, and we want more people to benefit this. Thank you very much, and God bless you.
Thank you so much, Prof. We are grateful. Ladies and gentlemen, all too soon we are bringing the very first session of our training seminar, the collaboration between FMI and Glimps, to a close. We have Reverend Mrs. Gladys Frimpong-Manso with us. She will give us a closing prayer and the benediction.
Heavenly Father, we thank you for this great opportunity. We have learned a lot. Thank you for the facilitator and everyone who I pray that, Lord, you help us to practice what we have learned. Because as we practice, we become use of what we have studied, and the profit will always come. Help us to overcome every negative thing that is not making us prosper, and to discipline our lives so that we live to the glory of your name. Bless all the participants, the traders, the pastors, everybody. Bless our hands, Lord, so that we get enough to bless those who are in need. As we live, we pray that you go with us and help us to reach our destination. The next meeting, we are praying for a fruitful seminar.
Yes, no. Amen. Thank you very much. Please resume your seats. We'll give you the certificates and then the refreshment before we leave. So, so let me have the certificates. I'll mention your name And then
If I'm true, I want to see something like that.
Let me end just a minute. So our online audience, thank you once again. You send your refreshment online. And so we are grateful. Yes, Papa.
Mehyia very Reverend Helena Opokusi Akode. Say and man say no online. Mehyia ne pa.
Abimpacha mejoso.
You.
Yamin shao, medase.
Bye.
Pacha medase, bye.
Bye for now for our online audience. See you in August.
that's right.
Thank you.